What's up, everybody? Just going to do a little bit of wheel trading today. I want to see if I can make a couple $100 in just a few minutes work. So this is just some live trading. If the first place I always start is look at my open positions. I just like to close anything that's reached total return of 80% or more. It's probably time to move on from those. So some of these are going to have a really wide bid-ask spread, but this one does not. I can close this. My short put, I'm going to split the difference at $5. Just going to run through these all real quick. Some of these, if you look at the return, it's at 98%. The bid-ask spread is huge. There's just no point even trying to close that one right now. All right. Do anything else that's hit 80% return? I haven't. Just the one. All right. So it looks like I got a little bit of buying power, just over $11,000, 11.5. So I'm going to go over to the option scanner and Premium Pirates and look for some new positions and some new premium to plunder. So for right now, there are a couple of these positions that they've just been really volatile, and the bid-ask spread has just been all over the place. So it's returning junk in the scanner occasionally. But I like to set my strike price at 50. I'm just not trying to open any position that's more than 5% of my portfolio in one go. And lately, I've been looking at deltas of less than 0.3. And there you go. It says covered call service. Just the name of my filter. I'm looking at cash secured puts here. All right. So Moderna is one. This annualized return is almost 1900%. This is just going to be, due to the volatility of that, the earnings announcement is coming up in a couple days. So we're going to pass this one for now. Same thing, this Schlumberger Limited. And I have my scan set to my popular real stocks watch list as well. So I'm going to actually exclude those two. And Rocket Mortgage has been producing all sorts of. I'm going to exclude these just to get a clean list here. All right. So these are a little bit, the annualized return of 458%. Still would be amazing to get that. But again, this is an issue with when the expiration date is on the 8th versus the earnings announcement on the 5th. But I already have quite a bit risk on Snapchat already. If you're looking at, I'm already at $4,350 in open risk on that. So I'm going to pass on that one for now. Next one's Pinterest. And I have my my option scanner here. I'm looking at returns by annualized return, right? Not total return. So you'll see here, this Snapchat position is 5.3% return, but it's a couple weeks out versus this one that's got 3.3% return is a week sooner. So I like to try to maximize my annualized return. Just over time, you're going to make a lot more money doing that. I'm pretty topped up on Pinterest too. I know that Celsius right now is selling or trading at higher than its fair market value. So I'm going to exclude that. Take Snapchat, Pinterest off of this as well. Again, Toast is another one that I know is selling above fair value. All right, DraftKings. Let's check this guy out. All right, so I'm pretty topped up on DraftKings too. Warner Brothers Discovery. I've been all over this one for several months now. So I got a little bit of risk, 3,800. But the strike price at $12.50. I can take that position if I want. Just look at the expiration. It closes one day after an earnings announcement. I don't, you can put a filter on here to exclude any CSPs that have an earnings announcement coming up, but I'm not really doing that right now because to me, when I'm filtering by the delta, that expectation of the price moving, I believe is already factored into that delta number. If the market was a little bit more extended than what it is right now, I may be a little bit more conservative with how many positions I'm willing to have open, how much risk I'm willing to have open if there isn't an earnings announcement coming up. But I was just double check. Warner Brothers Discovery fair value is $20. Is $12.50 strike. It's not going to put it over 5% of my total portfolio value. So let's get in on this guy. It is the 8th. At a 1250 strike, always verify the delta below 0.3. Always double check that. Okay, so it's showing me here premium of 28 cents. It looks like premium here. Yes, I can go ahead and 28 because that's what I want. This one may take a minute to fill. All right, we're going to let that one cook for a bit and see if it gets filled. Go ahead and move on. Ford's another one that just the options contracts have really weird price points. It's producing some strange results here. So let's go ahead and filter out a couple of things. Let's get DraftKings filtered out because we already know we're topped up on that. We're topped up on this Norwegian Cruise Line. Forward is a little odd. SoFi is trading above fair market value, and I'm pretty sure that I am also topped up on MGM right now. Pretty close. I don't want to go quite to 7,000 in open risk is what this would require. How am I looking on Dow? Up there too. I have a lot of open risk on CSPs right now, obviously. I think this is fair trading above. So it's trading at almost $30. Fair value is 22.80. I'm gonna pass on that guy. KView, pretty sure I'm topped up here too. Look at that, I'm not. All right, so we're trading at 22.08. The strike is $21 strike. Fair market value updated, gosh, 4 days ago is 24.50. So I can get in on this cash secured put lower than what Morningstar says the fair value is. I'm going to have this open through an earnings announcement, but it has a couple weeks to settle down. Again, I'm looking at delta 0.3 or below, just trusting that the volatility with the earnings announcement coming up is baked into what I'm getting in terms of my returns here. So this is a 32% annualized return. When you compare that earlier, we were looking at 1,900% annualized return. It really paled in comparison, but to be honest, who's going to be upset about 32% return every year? So let's open up or go a short put on the 29th. Strike price is 21. Verify the delta, below 0.3. Yep. Premium needs to be 50 cents. So I bet if I hit scan here again, I might get some different results. Let's see what the spread is. See, spread's a little wide. In this case, I might, just to try to get filled, I'm going to go not instead of 50, I'm going to go to 48, closer towards the bid than the ask. All right. And let's see it, let that one cook and see if it gets filled. Right. EC or PG and E Corporation. That is one I've been hitting pretty heavily lately as well. All right. This is again expiration of August 29th. Earnings announcement is 2 days from now, but I have room for sure. Let's check the fair value. The fair value is at $19. The strike we're looking at here is $13. I mean, this is another one you can move on. It hasn't been updated but once at the beginning of this month. And the fact that we have earnings, like, I would be really cautious to go over 5% of my portfolio open risk on this one stock. I think for now, just given that even with another $1,300 tied up to cover the cash secured put, it's still not going to push me over 5% of my total portfolio value. So let's sell put on the 29th, $13. I already have one of those open. What did I see the premium was at 29? See if we can get in on this. I'll probably get 29. Oops. All right. Another one. Letting it cook. All right. Devon Energy. What do we got here? All right. So with the $32 strike, if I open that position, the cash to cover it's going to put me over 5% of total portfolio value. I really want to leave that for another day. I don't want to be overexposed to anything right now, especially considering like I'm going to have to hold on to this position through an earnings announcement. I'm just not willing to do that right now. This one, I've tried to open several CSPs here lately, and I just had trouble getting filled on these. So this is a $31 strike at a $34 fair value. No earnings announcements. If I get filled on this, it'd be great. 26% annualized return, 2% return for a couple weeks for August a month. If I get 2% a month, yeah, I'd be ecstatic. That's gold in terms of retail trading your own account. Like I said, I have not been able to get filled on tech for whatever reason, but there's no reason not to try to put a line in the water and see if I get any bites. Again, verify the delta at 0.6, 63-cent premium. Yeah, I really want to get filled. So the 63, I'm going to put 62 here. That's why. Let's go 60 cents then. Some of these you have to do your orders in 5-cent increments. Again, I'm like over $3 here. Over time, oh, look at that. One I said wasn't going to get filled, filled instantly. All right. Okay. What else do we have here? HPQ running low on buying power at this point. Fair value of this $30. One's a couple months out still. I guess a month and some change. Take a look at Halliburton. You're coming down here to where I'm looking at like annualized return. Things being equal, right? If I can open this Halliburton CSP where there's no earnings announcement that I have to deal with versus HPQ below it that has the same annualized return, but I have to deal with earnings, I'm going to go for the Halliburton every time. So just can't just always do a straight line calculation of what your annualized return is. The two, right? They're not the same. This Halliburton is a much better CSP if, I will say that if it's a below fair market value. So the strike here for this guy is 21.50. What's fair value? $30, updated last week. Like, this is an absolute no-brainer. We're going to go for this one too. Wait, I should have the buying power for this. Still, sell, put, September the 5th. I don't always like to write contracts 38 days in the future. We're talking 38 days for 2.2% actual return, 24%. Just fantastic returns. So what do I need to get the premium on this guy? 48 cents. I can get that. Boom. And there you go. So when I say the premium is 48 cents, you're new to selling options contracts, a 48-cent premium. If you're on the short side of the CSP, that means $48 in premium to you. So it just got used to looking at premiums in terms of like, but actually like the dollars you receive. So that one got filled immediately too. All right. So if I like all those up of what I just got, let's see if they got filled first, and then let's not count our profits before they actually exist. So let's just throw open a calculator and look at it. So these two didn't get filled. So let's say we got filled on the PCG for $29. I got filled on the tech for $60, and I got filled on Halliburton for $48. There you go. So we had $137 in what, 12 minutes worth of work. Do that again every day, right? There's still a good chance I'll get filled on these before the market closes today. And if they do, I will go ahead and update my wheel trader tracking in Premium Pirates. But as you can see, super powerful tool. Really, if you've ever been a seller of options contracts before, there's just no tool that's going to help you just find these opportunities. Like, nothing out there that's going to scan across all these strikes, let you compare all this. It's incredible. It's what did I say? $137 in 10, 15 minutes worth of work. Literally do that every day. So hopefully it's helpful. I always try to get these videos so you guys can look at some live trading and how your trading actually looks when you do it in real time. All right. Until next time.